Salam everyone. So in this video lecture we would be solving a question pertaining to books of original entry. In this we will be making all 6 books of original entry that we discussed, that is cash book, purchase journal or purchase day book, sales journal or sales day book, purchase return journal or purchase return day book, sales return journal or sales return day book, and journal. First we intend to make cash book in this video. So as I discussed, these are the transactions that occurred during the month of April 2020, and now each of these transactions would be posted in either of the books of original entry, in one of those books of original entry, the 6 books of original entry which we discussed. So let's first read out and see which of these transactions would be posted in cash book. We can identify them. So if you read out adjustment number 1, started business with 30,000 in the bank and machinery worth 15,000. So basically the owner is starting business with 30,000 in the bank account and he's also bringing in machinery worth 15,000. The thing is, these on 1st April 2020, these are two separate transactions, two separate events occurred. Like owner invested in the business account, in the bank account of the business, and also owner brought the machinery as well. So both of these events are separate. Now first event, since that involve bank, because the money is flowing into the bank, so this would be recorded in cash book. So we can write C over here. The owner is investing machinery into the business, that would be recorded in journal, which we'll make later on. So we can write journal over on top of this. Then bought goods on credit from Albert, so this would be recorded in purchase journal. Sold goods on credit, so this would be recorded in sales journal. Bought goods on credit from Tim, Tom and Kim, so this would also be recorded in purchase journal. Sold goods on credit, this would be recorded in sales journal. Paid salaries via checks, so this involves bank, so that is why this would be recorded in cash book. I am writing C over here. Paid 2100 via check for family trip of Melinda, so money is flowing out of the business bank account, so we would write cash here. So we would enter this into cash book. Return goods to Tom worth 200 and Albert, so we return goods, so this would come in purchase return journal because we are returning goods returned to us by Javed was a customer who returned goods to us, so this would come in sales return journal. We paid Newton, so we are paying Newton via check, so this involves our bank account, so this would come in cash book. Norman paid us his account, this would also come in cash book because this involves check. And bought motor vehicle on credit, since we are buying motor vehicle on credit, so this does not involve any cash or bank as of now, and it does not include goods, so this would be recorded in journal. Javed settled his account paying us by check, we are getting money in our bank account, so this would be recorded in cash book. We paid Kim in full via check and he allowed a cash discount of 4%. Since we are paying via check, this also involves bank, so this would come in cash book. Withdrew cash from business bank account for office use and 1,000 for personal use, so cash is going out of the business and 5,000 is coming into the business bank account and the other is for personal use, so this would also come in cash book. These are also two separate events occurring which we'll discuss, but both of these would come in cash book only. Like 5,000 which they are withdrawing from business bank account, that is a separate event, and 1,000 for personal use, that is also a separate event. Cash purchases, this involves cash, so this would be included in cash book. Cash sales, this would also be included in cash book because this includes cash. Paid Ruber Enterprises via check, this involves bank, so this would also be recorded in cash book. Tony lent us 2,000 paying us in cash, so this also involves cash book. Paid rent via check, so this also involves cash book because bank is involved over here. Now we're going to post all the transaction that involves cash or bank which we identified would be recorded in cash book into the cash book. So let us start off with the first transaction. The first transaction, as you can see, says started business with 30,000 in the bank. This part would be recorded in cash book. Before moving or starting off with the cash book, you should know, like, this is the format that you have to follow for 3-column cash book because the discount is also involved in this question. 3 columns on both debit and credit side. So in order to ease off, all these which I am highlighting with red is debit side, and all this which I am highlighting now with green is credit side. If the money flows out of the business, we would record it on the credit side. money goes out, so we would record it on the credit side. But if the money comes in, so we would record it on the debit side. As we know the rule of debit and credit, if asset increases, so it gets debited. So hence, if cash or if you're getting cash, or if you're getting money in our bank account, so our asset would increase, therefore it would get debited. And also if it goes out, so our cash or bank would decrease, and hence it's getting credited. Now let's start off with the example question. So on first, you started business with 30,000 in the bank. So if I talk about this transaction, the double entry would be bank is getting debited and capital is getting credited. Bank is getting debited and capital is getting credited by how much? 30,000. So I can say 30,000 is flowing into the business bank account. So what would I do? I'll write 30,000 here because it's coming into the business bank account, and here I will write down the date as well, 2020 April 1st. Now we can clearly see over here that business is receiving 30,000, so bank is getting debited. But there's still a question in mind: if bank is getting debited, what is getting credited? So whatever is getting credited would be written over here. So on first, capital is getting credited over here. And then let's read out the next transaction. So next transaction that involves cash is on 7th, paid salaries 1800 via check. Paid salaries 1800 via check. So what we would do is we would write date over here, 22 April 7th, and since we are paying salaries via bank account, so we would write 1800 over here. Now we can clearly see over here that money is going out of the bank, so bank is getting credited. But if bank is getting credited, what is getting debited? So obviously salary is getting debited, so we'll write salaries over here. Now if we do look at the transaction number on 8th April, paid 2100 via check for family trip of Melinda. So whatever personal expense business do on behalf of the owner is called drawings, and drawings get debited. So drawings would be debited by how much? 2100, and 2100 goes out of the bank, so bank would be credited by 2100. So we can write 2100 in the bank account, and 8, since bank is getting credited, so what is getting debited? Drawings, as we can see. So we'll write drawings over here. Now if we look which transaction involves cash, so transaction on 15th involves cash. We paid Newton 1000 via check. So we are paying Newton 1000 via check, so money is going out of the bank account, so we'll write 1000 over here. And on what date? It's going 15th. Now we can clearly see bank is getting credited, so who's getting debited? It's Newton, so we'll write Newton over here. Now Norman, now if you look on to transaction number 16, that also involves cash book. So Norman paid us his account of 2500 via check and was allowed a cash discount of 5%. So Norman, he paid us his account of 2500 and was allowed a cash discount of 5%. So we'll calculate cash discount first. 2500 into 5 upon 100, so cash discount is 125. So if we subtract 125 from 2500, so he paid us $2375. So we are actually getting $2375, and we are giving him $125 worth of discount on prompt payment. So Norman paid us his account, so we are getting money from Norman. On 16 we are going to write, does he is paying via check, so we will write 2375 in the bank account because we are receiving 2375 in our bank, and we will write 125 in discount allowed column, because this is the discount that we are giving him on paying us early. Norman is paying us early, and it's written cash discount, and we clearly know cash discount gets recorded. Now if you read out transaction number 18th, so it says Javed settled his account paying us by check. We allowed him a discount of 2% on prompt payment. So now Javed is also settling his account, but the amount is not mentioned which he is paying, so we'll have to calculate it on our own. So let's see. So if you look at the question, we sold goods worth $2300 to Javed, but we offered him a trade discount of 5%. So for how much dollars did we sell those goods? So you can work out 23 into 5% is how much? 115. And if I subtract 115 from 2300, so this would become 2185. So we sold him goods for 2185. But if you also see if Javed whether returned goods to us or not, is if something else happened pertaining to Javed. So if you so if I look at transaction on 12 goods returned to us by Javed worth 300. So he returned $300 worth of goods, but 300, as we can see in the brackets, it's written list price. We offered him goods, we sold him goods after subtracting discount from list price. Now when he's returning us goods, so we'll also have to adjust discount in that goods as well, because 300 is the list price, but we sold him goods at 5% less than the list price. So obviously we'll have to remove the discount amount from this $300 as well. So if you remove the 5%, 300 into 5% is how much? $15. And if we subtract 15 from 300, so he returned goods to us worth $285. So he bought goods, we sold goods of $2185 to Javed, and he returned us goods $285 of $285. So how much does Javed have to pay? 2185 minus 285. So as of now we can understand that Javed has to pay $1900. He had to pay $1900 to the business, but then what happened? Javed settled his account paying us by check, and we allowed him a cash discount. We allowed him a discount of 2% on prompt payment. So he had to pay 1900, but we allowed him a discount of 2%. So if you multiply 1900 by 2%, it will be 38. So he paid at 38 less, and if I subtract 38 from this, it would become 1862. So he paid us 1862. So on 18 we are going to write 1862, and here we will write 38. And since bank is getting debited because we are getting money, who is getting credited? It's Javed, because Javed is our receivable, and our receivable is increasing or is decreasing because he's clearing his account. And we forgot to write the name on 16 as well. Norman paid us his account, so Norman is getting credited, so we'll have to write Norman over here. Then after 18th, we can see we paid Kim in full via check, and he allowed us a cash discount of 4%. Kim, so if we calculate the amount for Kim, so we'll have to see transactions pertaining to Kim. So Kim bought goods from us, so we bought goods on credit from Kim worth $2500, and he allowed us a discount of 5%. So for how much dollar did we buy goods for? 2500 multiply by 5 upon 100 is 125, and we bought goods worth $2375 from Kim after adjusting trade discount. Did anything else happen pertaining to Kim before we paid him his account on 20th? No, nothing happened. So basically we have to pay him $2375 after adjusting trade discount, but he allowed us a cash discount of 4%. So we'll have to see how much is the cash discount. 2375 into 4%. If we work out, this discount becomes 95, and so we'll pay him 95 less 2375 minus 95, we'll pay him $2280. How did we pay him? We pay him via check. We paid him via check. So this would 2280 would come in our bank account, and we can write date as well, 20th. Now since bank is getting credited, who's getting debited? Kim. Kim was our liability, and once we settle the accounts of our liability, so liability decreases, and if liability decreases, that gets debited. That's why Kim is getting debited. After 20th, we have got cash transaction on 22nd. Now as I told you, these involve two transactions. First, let's look at each of them separately. Withdrew cash 5000 from business bank account for office use. So cash, withdrew cash from business bank account. So if you clearly read that they are withdrawing money from business bank account, so I can say bank accounts, the balance of the bank account would decrease, but we will get physically 5000 cash in our hand. So cash would increase, but bank account would decrease. So hence cash would get debited, but bank would get credited. So we can clearly see cash is coming in, but money from bank is going out. So if cash is coming in, we'll have to write 5000 in this column, and if money is going out of the bank account, we'll have to write 5000 in this column, right? Because money is going out of the bank. and but we are getting cash, so 5,000 would be recorded in this column. Now what would we write in reference? So here we can clearly see bank is getting credited. Bank is getting credited, so who's getting debited because of bank? That is cash. So we'll have to write cash over here. On 22nd we'll write cash, and here since cash is getting debited and what's getting credited? Bank, so we'll write bank over here. But this would involve, we'll also write contra in bracket, because this transaction is coming on both sides of cash book. And if we look at the other transaction, we also withdrew 1,000 for personal use. Whatever for personal use owner takes out from the, whatever goes for the personal use is drawings for the owner, is drawings for the business, is recorded as drawings, and you know drawings gets debited and bank would get credited. So 1,000 is going out of bank account, so we'll write 1,000 over here. We'll write 22nd, since bank is getting credited and what's getting debited? Drawings, so we'll write over here. Now cash purchase is 2,000. If we buy goods on cash basis, so we'll have to pay amount, so hence we'll write 2,000 in the cash column, because cash is going out, cash is getting credited, but what's getting debited? Purchases, so we'll write purchases over here. We also forgot to write the amount of discount for Kim. Bank amount was 2280 which we paid to Kim, but he offered us a discount of $95, which we calculated 4% cash discount on giving him money early. So this 95 would come in discount received column, which we forgot to record. Now after 24th, we have got cash transactions on 26th, cash sales. So we'll be receiving money because of cash sales, 3,500 we will receive. So we'll write 26th, and since cash is getting debited, what's getting credited? Sales, so we'll write it over here. Now if we look at transaction on 28th April, so it says paid Ruba Enterprises 3,000 via check. So we are paying 3,000 from our bank account, so we'll have to write 3,000 here in our bank account. So clearly we can see bank is getting credited, and what's getting debited? Ruba Enterprises is getting debited. On 29th, that transaction would also go in cash book. It says Tony lent us 2,000, paying us in cash. So we are receiving money from Tony, but he's paying us loan. So we are getting cash, so we're going to write 2,000 in this cash column, because we are receiving cash, and since cash is getting debited, so what's getting credited? We'll have to write loan from Tony. Now if you read last transaction, that also involves bank. So on 30th we paid $1,500 via bank account, and we'll write rent over here, because if bank is getting credited, then rent is getting debited, so this would come here. And now in last we'll have to balance this cash book as well. So how will we balance this cash book? First we will look which let us balance the cash first. This is the debit side of cash, and this is the credit side of cash. Which side is bigger? Which side is bigger? Let's see. So the debit side of the cash is bigger, so we'll write 10,500 over here, and we'll also make this side 10,500. However, here on credit side we need to plug in the difference that we require in order for this credit column to reach at 10,500. From 10,500 we're going to subtract this 2,000 and we'll get 8,500. So 8,500 is the balance at the end of the month on 30th April. Similarly, for bank account, the debit side of the bank account is bigger. The total is, if you work out, 34,237. We'll also make that 34,237. From 34,237 we'll subtract 1,800, 2,100, 1,000, 2,280, 5,000, 1,000, 3,000 and 1,500 in order to see what's the amount we require in order to fill this gap. So that is 16,557. Now this balance CD would become balance BD on 1st May. So we'll write here 1st May balance BD 8500 16557. We won't do anything with the discount column except for totaling them, so we'll total them and leave it as it is. So the total of this column is 138, 143, 153, 163, and the total of this column is 95. Now we're going to make all 5 other journals together. So we'll see which of the transaction would be posted into sales journal, purchase return journal, sales return journal, and journal. So if you look at the first transaction, started in business with 30,000 in the bank and machinery worth 15,000. So we discussed earlier these are 2 transactions happening together, so we'll have to record both transactions separately. The owner is also investing machinery into the business, so this neither involves cash or bank, neither does this involve any goods, so obviously this would be recorded in journal. So we'll record this in journal. I've already drawn the format of the journal. So what's the amount? On 1st April we'll debit machinery by 15,000 and we'll credit capital by 15,000. So here you can see this is our journal. In journal we just have to post journal entries. First, machinery will get debited and capital will get credited by how many dollars? $15,000 and $15,000. Now if you look at transaction on 2nd, that is we bought goods on credit, so we are buying goods and we are buying them on credit, so obviously this would be recorded in purchase journal. So on 2nd April we bought goods from Albert and Newton, so we recorded in purchase journal. So on 2nd, this is our purchase journal. So the goods journal, all of them have the same format. First column is for date, the other column is for particulars, and the third column is for amount. So on 2nd we're going to write Albert and then also Newton. So Albert bought goods worth we bought goods worth 1,700 from Albert and $2,500 worth from Newton. Now if you read our transaction on 3rd, we sold goods on credit to Dave and Norman, so we'll record this in sales journal on 3rd. So you can clearly write it 3rd and 3rd over here, Dave and Norman, 2,000 and 3,000. Now if you read our transaction on 4th, so it says bought goods on credit from Tim, Tom and Kim, and their amounts is also mentioned, and all these suppliers allowed us a trade discount of 5%. So as you know, these are the list price which I mentioned, 1,500, 2,000 and 2,500. So we'll have to reduce the amount of discount from them in order to get to know at what price we bought goods from them. So we'll have to take out that final amount, and trade discount doesn't get recorded in the book. So let's take out 1,500's 5% is 75, and if I subtract 75 I'll get 1425. Similarly 2,000's 5% is 100, and if I subtract 100 from 2,000 I will get 1,900, and similarly 5% for 2,500 is 125, and if I subtract 125 from 2,500 I will get 2,375. So I will going to write this amount after adjusting discount in purchase journal, Tim, Tom and Kim on 4th. So purchase journal, Tim, Tom and Kim, 14 to 5, as we worked out 1,900 and 2,375. Now if you look at transaction on 6th, it would be recorded in sales journal. We have written SJ. So sold goods on credit to Imran, Wasim and Javed. So we sold them goods and they offered and we also allowed them a trade discount of 2-3%, 2-3 and 5% respectively. So we'll have to record this amount after adjusting trade discount. So let's adjust that. So Imran is getting discount of 2%, so 1,200's 2% is 24. If I deduct 24 from 1,200 I will get 1176. Similarly 3% of 1,500 is 45, and if I subtract 45 I will get 1,455, and if I subtract 5%, 2,300's 5% is 115, and if I subtract 115 I will get 2,185. So these are the amounts that we are getting. So we'll have to record them on sales journal on 6th. What are the name? Imran, Wasim and Javed. we write their amount respectively 1176, 1455 and 2185. After 6th, if you see transaction on 10th, it says PRJ, so that would be recorded in purchase journal. Return goods to Tom worth 200 and Albert worth 300. So we return goods to Tom, but Tom offered a trade discount of 5%. So if we are returning goods to Tom, obviously we'll have to remove the discount amount as well, because Tom offered a discount on list price. So he offered us at 5% less than the list price. So obviously we'll also have to deduct the amount of discount when we are returning goods. So 5% of 200 is how much? I think it's 10. So we are returning goods worth $190, and from Albert we didn't receive any discount, so we'll just record 300 only, because that's the only price. So we'll record this in purchase journal on which date? 10th. Tom and Albert, 190 and 300. After 10th, if you look at transaction on 12th, goods returned to us by Javed worth 300 list price and Norman worth 500. So these are the customers who are returning goods to us, and we offered Javed discount of how many percent? If you read on 6th, we offered Javed discount of 5%. So we'll have to remove 5% from 300 as well. So 300's 5% is 15, and if I remove 15 from 300, I will get 285. So 285 for Javed, and Norman 500, because we didn't give any discount to Norman. So we write how much in sales return journal? 12th, Javed and Norman. Javed and Norman. Javed returned us goods worth $285 and Norman returned us goods worth $500. Now if you look at transaction on 17th, that would be recorded in journal, because we bought motor vehicle on credit from Ruba Enterprises. This neither does involve cash or bank as of now, and neither involves any goods, so we'll have to record this in journal. So double entry would be motor vehicle debit, and Ruba Enterprises is a liability, and liability is increasing, so that would get credited. So motor vehicle debit and Ruba Enterprise credit by 19,000. So on 17th, we'll make this entry motor vehicle debit and Ruba Enterprises credit by how many dollars? 19,000. After we have posted this into books of original entry, we also have to work out the totals of all these goods journal. So we'll work out the total of sales journal. So if you work out the total, that would be 9816, and sales journal represents all those customers who bought goods from us on credit, like our credit customers. So we can clearly say Dave, Norman, Imran, Wasim and Javed, all of these bought goods from us on credit basis. All of these are credit customers. So we'll have to write total credit sales for the month. So sales journal reflect all the credit sales for the month. Purchase journal total is 9900, and this reflects total credit purchases for the month. And if I talk about sales return journal 785, its total returns from credit customer during the month, during April or during the month, you can write. Similarly, this is 490, so you can write total returns to credit suppliers during April or for the month. For journal you won't take out any total or something, you leave it like this. So here we are done with this question. Thank you.